Hello, and you're welcome to Global Business Insights, where we go deeper into the main global business stories. Just in, the European Union said it would impose higher tariffs on Chinese electric vehicles, as much as 38.1% on battery electric vehicle producers not cooperating with its investigation. Earlier, we got China's May Consumer Price Index up by 0.3% over the year, same as in April, and less than expectations for a 0.4% increase. Month on month inflation, however, came in at minus 0.1% compared to April's 0.1% increase, and also less than the 0% expected. The producer price index, or factory gate inflation, dropped 1.4% in May year on year, as against the previous decline of 2.5%. With elections in the UK drawing near, Rishi Sunak has offered over £17 billion in tax cuts to revive his stalling election campaign, but his manifesto was still attacked by some on the Tory right as still being too timid. Critics also warned of questionable plans to rein in welfare spending and curb tax dodging to fund the tax cuts. Yesterday in the UK, the unemployment rate unexpectedly rose to its highest level for 2.5 years, up to 4.4% in the 3 months to April. And in France, government bonds weakened further yesterday, and the stock sell-off deepened, the CAC 40 down 1.33%, sparked by Macron's call for snap elections. A far-right victory with Marine Le Pen leading France could imply a borrowing spree to finance populist promises. Indeed, all the major European indexes closed yesterday in the red. Stocks Europe 600 was down minus 0.93%, FTSE 250 minus 0.88%, FTSE 100 also closed minus 0.98%, DAX closed minus 0.68%. In the US, it's all about caution as two vital elements play out today. Investors will first digest May Consumer Price Index report just hours before the Fed announces its monetary policy update. Headline inflation is expected to show an increase of 3.4% year-on-year in May, while the core CPI is estimated to rise 3.5% year-on-year. If inflation turns out much higher than expected, that could spark a sell-off. Also, if Powell, or the dot plot coming out of today's FOMC, ends up being much more hawkish than speculated, that could also be rattling. Yesterday, indices in the US were mixed, helped by Apple soaring. Dow was down 0.3%, S&P 500 was up 0.3%, Nasdaq up 0.9%. Apple shares were spiking to new record highs after it unveiled new artificial intelligence features and partnerships at its ongoing annual developer event. Still on AI, Elon Musk has withdrawn his lawsuit against OpenAI and its chief executive, Sam Altman, 3 months after he accused them of compromising their original mission to benefit humanity. And in Nigeria, Diageo, the British multinational alcoholic beverage company, is selling its majority shareholding in Guinness Nigeria, reducing its footprint, but by no means exiting its presence. First, some macroeconomic data just in this morning. We got Germany's CPI month on month for May, up 0.1% as expected. Consumer price index for the year-on-year metric for May was 2.4%, higher than 2.2% in the previous month, but also as expected. Also in UK, we got GDP, which month on month came in flat. That is 0% increase. That's for April 2024. It grew 0.7%. However, in the 3 months to April, services grew 0.2%. Production fell 0.9%. Construction also fell 1.4%. The wet weather in April was mentioned by retailers, construction, and food and drink industries as a major factor in the growth data. The CPI for Germany is important, especially for the timing of the next ECB rate cut, and it also impacts on economic growth. As far as UK GDP growth is concerned, how tepid will growth in the UK continue to be is the question, and what can anyone do about it as parties make promises to the voting public. Apple introduced a range of new AI features pitched as AI for the average person, though users will likely need to upgrade to pricier iPhones to access the tools, which of course is not for the average purse. Apple's new AI features will require an iPhone 15 Pro at least. Macs and iPads perhaps get wider support, which by some estimates is just 5% of the current phone installed base. Analysts from Morgan Stanley, for example, see Apple's AI features strongly positioned to be the most differentiated consumer digital agent, and will also force more than a few consumers to upgrade their iPhones, thus accelerating a presently sluggish replacement cycle. It's still unclear when and what Apple will deliver as it promises a product refresh, but they think the building blocks are in place to unveil what could be a catalyst for a return to growth and more sustained outperformance. Apple has a strong reputation for delivering on what it promises. Bank of America is also optimistic about Apple's AI-enabled IntelliPhones, as others at the ongoing conference bought into Apple's AI strategy, also convinced it will push users to upgrade their devices, kicking off what they are calling an iPhone super cycle. Diageo, the British multinational alcoholic beverage company, is selling its majority shareholding in Guinness Nigeria, also the latest Western company to scale down its presence in the country. The spirits giant is selling 58% stake to Singaporean conglomerate Tolaram for 81.6 naira per share. Tolaram has joint ventures with several leading consumer goods multinationals, including Calanova and Colgate Palmolive. Diageo still owns the Guinness brand in Nigeria and will continue to license it to Guinness Nigeria, which still manufactures and distributes other Diageo brands, including Smirnoff and Johnny Walker. Omobola Johnson, chairman Guinness Nigeria, has very aptly called it a winning combination. That is a significant opportunity for the next phase of growth for Guinness Nigeria. The partnership, according to her in a statement, brings together Tolaram's deep expertise in manufacturing and distribution and Diageo's exceptional capabilities in brand building and innovation. Many analysts suspect that a devaluation in the naira has eroded capital buffers, and many are either deciding to infuse more capital to sustain operations or to exit to players more interested in investing in the African market. The combination of local currency instability and challenges in repatriating proceeds and settling foreign importation bills is a source of concern for many investors, according to KPMG West Africa boss Tola Adeyemi when he spoke with Global Business Insights. Like most organizations seeking to maximize profits and needing funds to focus on new priorities, we gather from reports that Diageo has been fine-tuning ways to increase profitability, selling its stake, for example, in Ethiopia, Mauritius, and Cameroon, as it sought to fund, among other new ventures, a strategic expansion of brewing capabilities at its home in Dublin. Others observe the increasingly evident new interest of Asian capital in the high potential African market. Also, this comes as global capital power is shifting from mature Western markets to high growth Asia Pacific and high potential developing economies with rising pace of urbanization and improving consumer strength. Asia Pacific centers like Singapore are also becoming more compelling for attracting capital. Western companies, however, are friendshoring and nearshoring more than before as cost of money is higher, geopolitical concerns are on their mind, and risk-return considerations are driving a recalibration of their investment focus and a rethink of their portfolios. This means Nigeria needs a proactive response for a different business environment requiring a novel approach from what obtained a decade ago. For Nigeria, there is also an opportunity for local investors to move into gaps in a fast-growing and urbanizing population. Exits, entry, and reshaping of business interests are normal. The bigger picture has to do with broader actions to enhance competitiveness, which will bring investors who are seeking a vast, still growing African market. This change in ownership here may truly be a synergistic combination, but one needs to ensure that others coming are also win-wins. The UK Office for National Statistics reported yesterday that the labour market recorded a drop in employment for the fourth time in a row, as it fell by 140,000 workers in the 3 months to April, less than the 177,000 decline in employment seen in the January to March period. The unemployment rate was up 4.4%, higher than the expected 4.3%, which is also the highest reading in more than 2 years. It's evident that firms are groaning under the weight of higher interest rates at a time when it's unclear if the Bank of England will follow the ECB in cutting rates when it meets next. Another concern, of course, is of wage growth. In the February-April period, average earnings, including bonuses, grew steadily by 5.9%, higher than the estimates of 5.7%. High wage growth drives inflationary pressures and hampers the BOE's move towards lowering interest rates. When the Bank of England meets next week, it will be just after the release of the latest inflation numbers, which could have an effect on the decision. Most analysts say, however, the data was still too mixed to shift the dial for the MPC, especially just weeks before a possible change in political direction when the elections are over. Many expect the first rate cut in the UK to come around August, but even that depends on further progress in bringing down underlying inflation pressure over the next few months. The CEO of Microsoft, BlackRock, ENI, and Enel will be joining G7 leaders congregating in Italy this week as Italian Prime Minister Giorgia Meloni pushes a major new initiative to invest in developing countries. Meloni has been pushing a development plan for the continent and will unveil projects on food, climate, and energy security, which helps not just to respond more proactively to the increasing flood of African immigrants, but also addresses China's expanding influence in the continent. Oil futures were nudging higher after a large bounce in the previous session as investors weighed updated forecasts from the Organization of the Petroleum Exporting Countries that left the outlook for supply and demand unchanged. Brent standard up. It's now over $82 per barrel, up 0.62% as we speak for the front month. Asian markets are mixed as investors assess the latest inflation data from China. Nikkei 225 down 0.66%, Hang Seng down 1.09%. The Shanghai Composite is up 0.42%. Shenzhen Composite, that's another Chinese index, up 0.22%, while the South Korean Kospi is up 0.8%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Thank you very much for watching and following.